This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
I want to move on now, though, to our post-game chart book. Listeners, you'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, just go to our homepage, macrovoices.com, and click the red button above Alex's picture that says Looking for the Downloads. The slide deck is titled, What's Next for the Markets? Patrick, what's next for the markets?
All right. Well, in the first four charts, page 2 to page 5, I have the equity markets of S&P, Nasdaq, Russell, and then a breadth indicator. And what I wanted to generally kind of approach is the question is that, was this already a market bottom and just the process now of the market rallying? Or is there another leg to this market correction ahead of us? And what we always need to start with and highlight is the fact that markets always are volatile in both directions during corrections. Some of the biggest market rallies on a percentage basis almost always happen in a bear market. I'm not necessarily calling this a bear market, but it's simply to highlight the fact that just because the stock market had such a ripping rally off of the January low is not something that should be overanalyzed as bullish until we see that the market has legitimately shifted into a bull trend mode. So far, the entire rally on the S&P 500 has been nothing but a 61.8 retracement, which is a typical reactionary move off of a primary trend. And now, while I don't want to say that the bulls are done, there's a lot of bullish work that the bulls have to do right here, right now, and break this market higher to show that there's legitimate follow through and more meat on the bone on this trend. If we see that these markets continue to just roll over off of this level, and the longer we spend below 4,500 or 4,400 on the Nasdaq, on the S&P, we may have another full leg of a correction ahead of us, one that could see us testing the 4,000 level if things got really out of hand. Well, I guess it could get even worse than that if it got out of hand, but a reasonable target for another down leg would be in that kind of 4,200 to 4,000 level. And one of the things that supports that in my mind, when we go to the Nasdaq chart on page 3, is that the Nasdaq simply has not been able to muster up any legitimate strength. The rally has been pretty pathetic on a relative basis, and rotation out of the general Nasdaq and unprofitable tech continues. And the Nasdaq was such an important leadership index during the whole run. The fact that we see such weakness in this is certainly not positive. When we then go look at the Middle America small caps, the Russell 2000 index, again, it was just murdered over the last 2 months, 3 months, and the rally has not even approached the big consolidation trade ranges that were established in 2021 between the kind of 21 to 2200 level. And so all these indices continue to be very weak. But on page 5, we have that market breadth. And the market breadth, this is just looking at the percentage of stocks on the New York Stock Exchange that are above their 50-day moving averages. Now, we got to a pretty oversold state, approaching under 25% at the time when the VIX was punching 38 on the upside. And that oversold condition was ripe for this bounce that we got in the markets. But in here, we have the VIX trading right back to the 20 handle on the downside at the same time as all the markets had their relief rallies, and the breadth of the market remains below 50%. We just see that this is not a broad rally at all, and there has just simply been nothing that has signified that this is just all upside from here. The point I think I want to conclude on this sequence of slides is that we're not out of the woods yet. The market is quite vulnerable, and it would not be a shocker for me if we still had another round of selling to come in the month of February.
Patrick, let's move on to my own favorite market. On page 6, you've got crude oil futures. What's going on here?
The one thing I just wanted to highlight is obviously since our last episode, we not only had a rip higher in crude oil, which got up to like that 93 level, but we equally had this 2-3 day oil pullback that got about a $3 pullback going the other way. What's interesting is that we've seen these very short-term pullbacks. These pullbacks that last 3 days, pull back a few dollars, and each time we've seen these, the oil market uses it as almost like a slingshot wind up to make the next bull pivot higher. I think personally what I'm watching for is will we get back to that 92, 93 level on Friday or on Monday? And if we do, does that set up for a punch to 100 on the upside? This is the type of a pullback that would normally start one of those. And so it'll be really interesting to see whether we get a breakout over the next couple trading sessions. What's your take on that?
Well, Patrick, the thing I'm watching, and it's very consistent with what you just said. First of all, like you said, we've had just a very small pullback. It's the typical wind up for the next push higher. But even though it's not drawn on this chart, just look at that high in July. Mentally draw a line from there through the high in late October, and you'll see that we're just about touching, and actually we perfectly kissed that the highest candle that you see in the last few days just touched that trend line. Are we going to break above that trend line, or do we need to consolidate sideways before this market can move higher? And if it's going to be that, with everything going on and all the news flow, could that consolidation sideways turn into a more substantive move down? If you look at something like not so much the last couple of months, but if you look on this chart back to, say, that correction that happened in July, what about something of that size here? Get us back down into the low 80s before powering higher to 100. This market has gone so far up so quickly, it really is overbought. And I think the reason for that, is the geopolitical tension between Ukraine and Russia, and what feels to me like the United States trying to fan those flames. I'm not sure why. If that all gets resolved suddenly, if there's some kind of treaty and everybody says, okay, Russia's not going to have a war with Ukraine after all, we all agree on that, nobody is beating the war drums anymore, I think there's got to be a very substantial correction lower. On the other hand, if we get an escalation, there's actually some kind of violence that occurs, somebody starts shooting, well, then it doesn't matter what the trend line says. We're going up, baby. But let's move on now, Patrick, to page 7. Copper futures. Boy, sure looks like the beginnings of another upside breakout there, or I suppose maybe it's not.
Well, you know what? In January, we had 2 false starts with copper, trying to break above the 450 handle and or 450 level, and really each time it faded. But right now, commodities are hot, and this time around, we got a pretty decisive break of that 450 level with some authority. Now, obviously, we're now a stone's throw away from copper's key highs in 2021 as we approach this kind of 475 to 485 level. But overall, copper looks bullish for the first time in a while, and one of the things I'm going to be watching is whether this is marking the beginning of another leg higher after almost a 1-year consolidation. And what we're seeing is that that is just transpiring on so many of these other commodities. So I wanted to continue to go looking at the grains, which is on page 8, 9, and 10. I have the charts of wheat, corn, and soybean. And while corn has had a huge run on the upside in 2021, it's been rather quiet at the start of the year. But that has not been the case when you go to the corn futures or soybean. On page 9, corn has just been working higher for the last 3 months, just up almost, it seems like every single day. And we seem to have almost an acceleration to the upside here on that. But while corn is hot, what has been really ripping has been the soybean. While it was in the gutter for almost all of 2021, in fact, in an almost outright downtrend, we have now seen almost a parabolic, the start of a parabolic rise in the beans, heading back to price levels where it traded in 2021 this quickly. It'll be really interesting to see whether the grains continue to be pressing this speed higher. One one of the things, Eric, that we were talking about, just whether, inflation can peak here in February. But I kind of asked the question in my mind is when you've got this kind of momentum in commodities, it's a huge input variable into determining those inflation numbers. How does inflation peak when we have such broad commodity rallying right across the board?
Well, I think the way inflation peaks, at least according to the people who think it's about to peak, is we resolve the cost of fuel, which is a big component of the cost of producing agriculture. And we don't really have secular inflation after all. And it turns out that a lot of what we see in these upside price pressures really was about the pandemic and constrained growing conditions and so forth. And once we start to return to normal, everything's going to get better. I don't think that's the way it's going to go, but it'll be interesting to find out. I can't help but notice here, boy, this looks like it could be the beginning of a cup and handle type of formation. The cup is forming, no sign of the handle yet, but looks like it's heading in that direction.
For sure. The final two that I wanted to touch on, though, Eric, was just looking at ones that we typically don't highlight, but I wanted to look at the big breakout in cocoa futures, which have just been ripping in the last week on the upside and broke to a fresh high. And the coffee futures, which have spent all of 2021 ripping. I mean, we had a doubling of coffee futures in 2021. And just when you think that it's gone far enough and is due for a correction, here we break to a fresh new 52-week high and just looks like it wants to go to the next level. The American breakfaster is going to be pissed. Anyway, but it's just commodity after commodity. You're seeing these trends just ripping. It'll be really interesting to see how much momentum these can keep.
Well, coffee is an interesting one because it is a drug that lots and lots of people are addicted to, and most of them can afford a doubling of the price, even though they would be unhappy about it. It's not like they're going to stop drinking coffee if the price goes up. So in terms of the ability of the market to correct itself because that increasing price on the supply curve is supposed to clobber the demand curve, guess what? Everybody who's caffeine addicted still is. On that note, Patrick, for people who are still addicted to your chart decks, which they enjoy every week here on MacroVoices, they can get them every single day of the week with a free trial of your service, Big Picture Trading. Information is on pages 13 and 14, or you can just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week, free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.